Hi, this is Bruce, the second installment of our series on the psychology of investing. Again, our website is focused specifically on turnaround stocks. These are not your classic value investing where you get $1 for 50 cents. The goal of the site is to identify stocks that could turn into 3, 5, and 10 baggers. This is a very unique part of the market. And obviously it's higher risk, but it is possible to find these securities. As you can see in this picture before you, most successful investors, in fact, do nothing most of the time. This is very true. What we will be doing on this stock site a majority of our time is stalking securities. We're going to identify stocks that are possible 5 to 10 baggers, but we're going to wait for the right setups. Again, we're not in the business of buying a stock at 4 and doubling down at 2 and 1. We're really looking to time our entry. As a result, we're going to have a lot of stocks on our watch list that we're going to be waiting for and watching the right setups. A lot of times we're going to be seeing the fundamentals that are continuing to deteriorate, and yet the technicals are going to show that it's bottoming. That is often a very difficult time for investors to start acquiring shares, as they're looking at what's happening in real time as opposed to looking at what will happen in the future. And that is what the market is very good at doing at bottoms. Is share prices refuse to go lower in spite of continuing bad news. As many of you are aware, there are many stocks in 2015 that have down 50, 60, 70, 90%. In fact, some of these stocks I have invested in and have been stopped out in, and I'm waiting to get back into the stocks. I'm waiting for the proper setups. And in our other section of this site where we start talking about the stocks, technical patterns that we're looking for, we'll go into what exactly I'm looking for. But right now we just want to focus in on the psychology of investing. As we spoke about in our previous talk, it's very important to understand, as you can see in this headline for this picture, it is remarkable how many people mistake a bull market for brains. Many value investors will do extremely well when the markets are going up. However, it's when we go into bear markets that value investors can suffer horrible losses. And once again, the reason being that value investing is buying stocks in companies that are underperforming. And in the beginning of a recession, companies that were generating good returns and have started to suffer can look like extremely attractive investments based on various financial valuation methodologies, such as price to book or price to cash flow, because the price will fall much faster than will the fundamentals of the business. But eventually, those earnings and metrics will continue to deteriorate. And that is what you call the classic value trap. That is what we are looking to avoid in this turnaround stock investing approach. We want to make sure that we don't confuse brains with a bull market. And we don't want to fall into the trap of thinking that we are smarter than the markets. Because as I will show you throughout our time on this site together, that the market has an uncanny ability to be correct, especially during downtrends. And to fight that can be extremely costly not only to your capital, but to your psychological capital. Our next picture is with the title, "On Wall Street, there's no truer adage than markets can remain irrational longer than you can remain solvent." And I think 2015 has shown that to natural resource investors. Perfect example, and I'm not liking to poke fun at them, but there was an activist group that acquired a large position in Cleveland Cliffs. I believe their average price was around $20 a share. The stock is currently $2. These investors are brilliant men, I'm sure, well educated, and seasoned investors, been around for decades, probably longer than I have. But yet, look at what happened. The market for iron ore, which even surprised me, went into such a severe decline. So were they better off saying that they were smart and that they could attest to the value at the time? Yes, at the present time when they made their share purchases, it was very clear to point out how Cleveland Cliffs was a tremendous value at that time. But the market went much lower in terms of pricing for iron ore. And that's the lesson again of this site. We are not going to try to predict where the bottoms are going to be. We're going to let the markets try to tell us. But we're also going to be humble enough to recognize that we don't know either. And what looks like a base, which is critical to our methodology, may turn out to be a false base and early. And we are professionals. We're trying not to be amateurs here. And professionals don't hold a grudge and don't stay in a position. If a significant base is broken, we get out. And again, this differs from all of the other value investors out there. But again, our goal is to be around for a long time. Losses such as were sustained in Cleveland Cliffs from $25 down to $2 is not something that I want or the followers of this site to want or to experience. As you can see in this slide, we're going to swim to our own race. We are focused on singular methodologies of combining fundamental analysis, looking at companies that are suffering from declines in their industry, or companies that are suffering from a micro event within their company, and trying to determine if the industry or company will be turning. And we're going to be coupling that with looking at the technical chart stock price patterns and combining the two. This is our own race. Many people may disagree and many people might not want to follow this. But again, this is my methodology. And if you're interested in learning and coming along, I wish that you will continue to watch these webinars and or screencasts or blog articles that I'll be posting as I will go deeper into the methodology. So thanks for watching this video, and I look forward to seeing you in the next one where we continue discussing the psychology of turnaround stock investing.